Hello everyone, welcome to Bond Bytes, daily bond market highlights from INR Bonds. I'm Nikhil. In today's market highlight, as after yesterday's uh, very strong budget on the front of both expenditure and as well as revenues, the deficit targets of the government, there's a sharp rally in the Gsec markets as discussed in yesterday's special Bond Bytes. Today, market continued the trend in Gsec space where the Gsec prices remained elevated. And also, one more angle to the whole Gsec story is, as you all are aware of that, where Gsec is adding to the global bond indices. So, which itself is likely to attract close to USD $30 billion from starting from June 24 to July 25. So $30 billion kind of a inflows coupled with domestic uh, domestic supply, and as well as the domestic demand with OBBPs like INR bonds, the penetration and the scope for retail investors to participate in Gsec, buying and selling of Gsec has become absolutely easy. So with all these positive factors and accessing Gsec and FPIs coming in investing in Gsec, so and as well as the supply, which is close to the cross borrowing is to be at long dated bonds to be at 14 trillion, and with the added demand pressure, the supply is unlikely to meet that levels. So even if you go with the government target of 14.75 trillion, and on top of it, you get state bonds as well. So you're looking at a total supply of close to 17 trillion or 17.5 trillion rupees. With that, current demand is about 15.3 trillion for Gsec, and you expect some growth in it, and as well as with the 3 trillion rupees of FPIs flowing in, you are definitely looking at a deficit of supply in the next fiscal year. So, what are the implications of definitely one of the first implication or a positive factor is there would be a good strong price movement, the price elevations in the Gsec likely to stay here, and the secondly, Gsec's are likely the government, the RBI might come out and do some OMOs if required, if the demand remains robust, and the fresh supplies if it's required. And but one thing you need to know is RBI has a limited longer bonds to sell. So because of all these factors considered, G6 are likely to prices are likely to stay in these elevated levels, and on top of it, you're going to have a interest rate cycle which is also expected to change in the next 24 months. So all factors together, it's a positive case for Gsec. And if you are planning to invest in Gsec, which carry zero credit risk and zero liquidity risk, but they do carry interest rate risk, you can check out our quick investor by INR bonds, which is available on both App Store and Play Store. Use the bond to experience the seamless process of investing in Gsec and as well as corporate bonds, secondary market offers, and primary as well. And coming back to market updates, here today we have a 10-year Gsec stayed flat at 7.05% and 5-year at 6.98%. And Sensex and Nifty are up as well today. They're as much up by 0.5% today. And USD and INR pair traded on a flat note. On the global front, 10-year USD started to rally from the last 1 month, currently at 3.89%. And and the corporate bond space, after yesterday's Gsec rally, we have seen 3-year to 5-year bonds yields falling by 5 basis to 7 basis. That means the price has risen for them as well. So in order to meet in order to meet the corporate bond spread between the Gsec and the corporate bond yields. Thank you for listening in. Do subscribe to our YouTube channel if you're not done so already. And the disclaimer is the investments in debt securities, municipal debt securities, securitized debt instruments are subject to risk, including delay and default in payment. Read all the offer related documents carefully before you invest. Thank you for listening.